Hi everyone. As I'm recording this video, we are under this lockdown, and I hope everyone is at home and everyone is safe. And I'd like to appreciate everyone involved in this brilliant initiative. I think it was a very interesting exchange of discussions which we can do even staying at home. Now, coming straight away to my presentation, I am Yash Madha from Gangtok, Sikkim, and the reason I am emphasizing that is because today I'm going to discuss on the Anomalies of Companies Act in Sikkim, that with an income tax perspective. I'm sure all of you know the fact that Sikkim is a special state of India, and it has special powers, it has special benefits that is given to the state of Sikkim. We shall discuss all that and what consequences it has to Companies Act and to Income Tax Act in Sikkim. So let's start with the presentation. First of all, let's discuss the major peculiarities of Sikkim. I'd like to share that Sikkim became a part of India in 1975, and by virtue of Article 371F, which was inserted in the Constitution, it gave special rights privileges, also included protection of old laws of Sikkim that were enforced before the merger. So Sikkim was an independent country, and in 1975 it merged with India. Now Sikkim has a lot of old laws which are presently in force, and there are many central laws which is applicable all over India, but not applicable in the state of Sikkim. Now, there are two such laws that is relevant to our discussion. Firstly, I'd like to share that Sikkim had its own income tax act. Sikkim was governed by Sikkim Income Tax Manual 1948 till as recently as 2008. Also, I'd like to share that Sikkim has its own Registration of Companies Act 1961. However, the same is defunct, or rather you can say not active since 2013. We'll go into the details later. Third peculiarity is that the Companies Act 1956 was never extended to the state of Sikkim, and even the present Companies Act 2013, although it had provisions for repealment of Sikkim Companies Act, but till now it has not been enforced in Sikkim. Hence, the conclusion is that because of the special status or special nature of the state of Sikkim, till now, as on date, there is no active, companies law which is actively in force in Sikkim, and of course that has its own share of various difficulties. Now, I'm referring to Sikkim as a special state again and again. So let's delve into a brief history on why Sikkim has this special status. In 1947, when India became an independent country, Sikkim was also a separate independent kingdom. It was a British protectorate. In 1950, an agreement, it's called the Indo-Sikkim Treaty of 1950, it was signed between India and Sikkim, by which Sikkim remained independent. It took control of all its internal affairs. It was wholly responsible for its internal affairs and administration. But the defense, external affairs, and communication was looked over by India. This continued till 1975, and rather, the third milestone is 1970 to 1975. Now, these were very turbulent times. There were a lot of local uprisings, there were a lot of social or political movements that happened, and a lot of factors. Now, which led to the merger of Sikkim with India. Now, what are those factors? Why Sikkim merged with India, or what caused the merger? Is a very interesting subject of history. But of course, let's focus on our area, that is income tax and taxation laws. And finally, we come to 1975, in which, due to various factors, Sikkim became a full-fledged state of India. The 36th Constitutional Amendment Act laid effect to this thing. And this 36th Constitutional Amendment Act also inserted an Article 371F in the Constitution, which gave special status to Sikkim. I'm sure everyone has heard of Article 370, which gave a special status to Jammu and Kashmir and was abrogated very recently. Now, what is this Article 371F? Now, this Article 371F has a total of 16 clauses, which gives special status that I'm repeating again and again. Now, let's just look at two clauses, that is clause K and N, which are relevant to this discussion. And so I'll just summarize it. Clause K says that all laws which were in force in Sikkim before merger will continue to be in force even after merger, unless it is amended by or repealed by a competent authority. And clause N says that the president, by notification, with certain restrictions and modifications, can extend or enforce any law in the state of Sikkim. Now let's look at Companies Act 2013 and Sikkim. Now, like I've said earlier, 1956 Companies Act was not applicable. Sikkim has its own Companies Act 1961. Now, when 2013 Companies Act came about, it had a section called Section 465 called Repeal of Certain Enactments and Savings. Now, this section intended to repeal the Sikkim Companies Act. This section 465 has been notified with effect from 30th January 2019. However, only the portion of this section which deals with the repealment of Registration of Companies Act Sikkim has not yet been notified, which means till now Companies Act 2013 is not yet notified in the state of Sikkim. Now, because of this, what is the present status? The present status of not having a Companies Act in Sikkim is that till 2013, at least the Sikkim Companies Act was there and Sikkim companies could carry out all activities. But since 2013, the concerned department which handled all company matters has stopped entertaining all applications for incorporation of company, amendments to company, retirement of directors, or no matter what be the issue, it can continue the way it is, status quo, but if it requires any amendment or if a new company needs to be incorporated, that can no longer be done. The concerned government department was governing the operation of Sikkim Companies Act is no longer doing so. So that is why I use the word defunct and the fact that Sikkim Companies Act is inactive. Now, what if I want to incorporate a Indian company in the state of Sikkim? Again, it's not possible, other than the fact that it's not enforced. Even if you look at SPICE, the form SPICE, which deals with incorporation of companies, or INC 22, which deals with registered addresses, in the option box in the menu for state drop down, you will not find the option for selecting Sikkim. So it's practically not possible. But having said that, I did a lot of research and I found out two companies which were incorporated with a Sikkim registered address, and that too under ROC Shillong. Now, how that happened, it's very strange because these are the only two companies I found. How they did it, I don't know. But as of now, practically, it is not possible. Even companies which are presently working in Sikkim, Indian companies, they are incorporated outside. Most of them are incorporated with, let's say, a Siliguri address or some other address. In fact, I'd like to share that even Smart City Limited Gangtok or Smart City Limited Namchi, which are government companies, are incorporated with a Darjeeling address, as far as I remember. So this has resulted in Sikkim being the only state in India which, for the past 6 years, there is no Companies Act in force and it's in a state of limbo. Now, what are the issues because of this anomaly? First, like I discussed, companies cannot be incorporated in Sikkim at all. Secondly, again, like I discussed, existing companies, there can be no amendments, whether it be registration or director's amendment or change of address or resignation, nothing is possible. Thirdly, Sikkim companies do not have a SIN, company identification number, nor do the directors have a DIN. So when you talk about it at a national level, it creates a lot of issues when these companies work outside Sikkim. Again, the MCA portal, which governs all the companies in India, for obvious reasons, do not have any data related to Sikkim companies. Hence, Sikkim companies cannot work outside because of these reasons. A very interesting thing is that till at least a few years back, a Sikkim company could apply for a PAN. But since the past 2-3 years, PAN cannot be applied no longer because NSDL is no longer issuing new PAN for companies. It is issued through MCA at the time of incorporation. And of course, that is the reason Sikkim companies cannot apply through MCA. I've tried all means. I've tried through NSDL, I've tried through MCA, I've even written practically to the income tax department. But as on date, if a company does not have a PAN, there is no way it can apply for a PAN. At least I have not found a way. If you all could suggest me a way, it would be really helpful. There are a lot of practical cases which are hanging because of that. Now, of course, if there is no PAN, there are two issues. Number one, no GST registration. You cannot do any effective business. And number two, if you receive any payments, then TDS, applicable payments, TDS will be deducted at a higher rate of deduction, that is 30%, because of a lack of PAN. And more importantly, the identity of Sikkim companies is not clear, and very frequently it has been challenged, especially in the Income Tax Act. Now, I'd like to discuss two case laws in detail. One is Himal Enterprises Limited versus Income Tax Officer ITT Kolkata, which is a decided case. And another case is Tista Rangit Private Limited versus Union of India. This is still a sub judice case. The Sikkim company, when assessment was taking place for the assessment year 13-14, it contended that we cannot be assessed as a Sikkim company because we are not covered under any definition of the IT Act 1956 or 2013 is not valid to us. The tribunal held that the revenue has not brought on record any evidence of merger of the Companies Act of Sikkim with the Indian Companies Act. Hence, we uphold the contention of the SEC. It should be assessed as an AOP and not as a company. In short, the ITAT ruled that since that you cannot assess Sikkim company as a normal Indian company, so you should assess it as an AOP. Now, there's a second case law which is still sub judice, that is Tista Rangit Private Limited. And it was argued by the very learned counsel, Advocate Pradeep Agarwal. And he argued that it is a settled position of law that a taxing statute is to be strictly construed. If a particular entity cannot fall within the expression of person occurring in section 231, no liability attaches to that entity to pay tax. Now, how we justified it was by 4 important observations, which I tried to explain in a very simple way. The case law is very interesting. It should be read in depth. I'm trying to explain it in a very short and a very simple gist. The first difference was that Section 231, Section 217, and Section 226 of the IT Act 1961, which are various defining sections, do not include within the definition Sikkim companies established under the Sikkim Companies Act. Now we will discuss this in detail in the next slides. The second contention was that the Parliament, while extending the Income Tax Act 1961 to Sikkim, has not amended the definition of Indian company under Section 226 to include Sikkim companies. The third contention is that, again, Section 226 of the Income Tax Act defines companies as company under a law formally enforced in any part of India. The word formally enforced is used. Sikkim companies were not formed under a law formally enforced in India. And finally, they went one step ahead and said that no computation mechanism has been prescribed for assessing tax of Sikkim companies. So what they are trying to argue is very extreme, but it's a very interesting argument that since a company registered under the Indian Sikkim Companies Act does not fall under any definition of person, hence it's not liable to pay income tax at all, whether the such income is earned within Sikkim or even outside the state of Sikkim. Now let's discuss the first argument in detail. Section 231 defines person to include company. Section 217 defines company to mean, among other things, an Indian company or a body corporate incorporated by any laws outside the state of India. Now, Section 226 defines Indian company to mean a company formed and registered under the Companies Act 1956, and it includes a company formed and registered under any law relating to companies formally enforced in any part of India. Now, let's look at Section 226 in detail, right? So here in Section 226, like we discussed, it emphasizes on the word companies formed in force, formally enforced in any part of India. Now, the first, contention argument is that this definition of 226, it talks about Jammu and Kashmir, it talks about Dadra, Nagar and Haveli. Now, when Jammu and Kashmir, when Goa, when Daman and Diu, when Union Territories of Dadra, Nagar Haveli and Pondicherry, these are also independent provinces at the time of independence of India. When these merged or were annexed or whatever be it with the Indian Union, various amendments were made to the definition of companies in Section 226(1) to include companies formed in these various territories. But no such amendment has been made till date to the Indian Companies Act to include Sikkim companies. Second thing is that the Companies Act 1956 has 2 sections, Section 620B and C. 620B includes Goa, Daman, Diu, Dadra, Nagar Haveli, etc. It extends the Companies Act to these sections, to these territories. And Section 620C brought the companies incorporated in Jammu and Kashmir under its previous laws into the mainstream. But no amendment till now has been made either in the Indian Income Tax Act or Companies Act to bring about companies incorporated under the Sikkim Companies Act. So that is the first argument. The second argument is that Section 226 talks about company formally enforced in any part of India. Now they've said that let's compare this with the definition of a previous company law in the Companies Act. So section 234 of the Companies Act defines previous company law to mean any of the laws specified in section 3(1)(2) of the Companies Act 1956. Now section 3 subsection 1 clause 2 defines existing company to mean a company registered under any previous company's law specified below. Now this is that section 3 subsection 1 section 2, and these are the various clauses below. I mean, these are the various things which are specified below. None of these clauses specify Sikkim Companies Act. So the clause A to F do not specify the Sikkim Companies Act. Now section 3(1)(2) is a restrictive section, and hence the definition of company under this section cannot be expanded to include Sikkim companies, since Sikkim companies are not mentioned under this section at all. Now the third argument was a very simple argument, that section 226 talks about a company formally in force, incorporate, formally in force in any part of India. Now Sikkim Companies Act has not yet been repealed, so it is still a law in force. Active or not active is a separate thing, but it's still a law in force. So companies incorporated under the Sikkim Companies Act remains in force. The definition cannot be expanded to call it a law formally in force in any part of India. And the fourth argument is again extreme, and it is argued that the companies assessed under the Income Tax Act 1961 have to be taxed on book profits, which are computed from the 2013 with certain modifications, additions and deductions as per the Income Tax Act 1961. Now, since Sikkim companies are not covered under the definition of companies in the Income Tax Act or Companies Act as discussed earlier, there is no computation mechanism provided in the Income Tax Act for computing book profits of Sikkim companies for the purposes of taxation. Hence, it is well settled that computation and charging section are an integrated code. Where there is a case in which the computation provisions cannot apply at all, it is evident that such a case is not intended to fall within the charging section. Thus, a company registered under the Companies Act 1961 is not liable to pay income tax whether they earn income from within or outside the state of Sikkim. So obviously, the case of Tistarangi takes it a step further and totally challenges the applicability of the Indian Income Tax Act. Now, having discussed all this, there is obviously an urgent need to resolve this anomaly. The various obvious reasons are, firstly, once this anomaly is resolved and a proper Companies Act is working in Sikkim, of course, new companies will be incorporated in Sikkim and existing companies will be able to properly carry out their functions. Number two, Sikkim companies will have a nationwide recognition. Again, this will lead to growth of trade, growth of business. The local entrepreneurs and business of Sikkim can effectively use company as a platform or as a valid entity to carry out their business in Sikkim. And because business will increase, obviously government revenue, government has been losing out a lot of taxes and revenue because of this strange situation. So government will also gain a lot of revenue. And Sikkim will no longer be a state with practically no company law. Now, what are the two ways out? Now, I'm not a constitutional expert, but in my humble opinion, I think there are two things that could be done. First is that the Companies Act 2013 should be enforced in the state of Sikkim, but with certain exemptions, modifications, relaxations, and transitional provisions, which will help to protect the interests of Sikkimis and Sikkim companies. And this will also ensure a wider acceptance of the Companies Act in the Sikkim society and polity. Just like when income tax was enforced in Sikkim, there were a lot of oppositions, and it took almost 20 years to actually enforce the Income Tax Act in Sikkim. But since Section 1026 AAA was introduced, certain benefits were given to Sikkimis. Income Tax Act is very actively functional in Sikkim since 2008. And the second way out is probably to revive, to regularize, to reactivate the Sikkim Companies Act 1961. And it should be suitable amendments and modifications should be done because it's an old law, so it should be brought at a modern scenario. And national recognition should be given to Sikkim companies by allotting them a SIN, by giving directors a DIN, and the data of Sikkim companies should be updated in the MCA website. So these are two mechanisms which hopefully the government should work out to make companies law effective in Sikkim. I'd like to conclude by saying that it was a pleasure researching for this presentation and presenting in front of you. Of course, the various interpretations and discussions in the presentation were based on various case laws, the practical issues that we, the CAs, face in Sikkim, and with my little humble knowledge on this subject which I have. And these are subject to interpretations, arguments, counter arguments, and discussions. And I would request all the learned members, experts in income tax and company law, to analyze whatever I've said, to get back to me. My contact details are given, to discuss with me, to enrich me with your knowledge and with your feedback. I hope you all found this presentation useful. And since this is a period of lockdown, it might be cliche, but it is absolutely important to say, stay home, stay safe. Thank you so much.